Do you believe your retirement savings are safe because you have a diversified portfolio? I have spent over 30 years watching the cycles of Wall Street, and I am here to tell you that the safety net you have been relying on is actually a ticking time bomb. Most of us were taught that a mix of 60% stocks and 40% bonds was the ultimate shield against a market crash. But in 2022, we saw the unthinkable happen when both stocks and bonds collapsed at the exact same time. For millions of retirees, that was the moment the dream of a peaceful retirement started to slip away. We are living in an era of extreme unpredictability, where events that experts call impossible happen every few years. These are the Black Swans. A Black Swan is an event that is nearly impossible to predict and carries a massive impact that changes the world forever. Think of the financial crisis in 2008 or the global lockdowns in 2020. Most people spend their lives trying to predict the next storm, but I am here to tell you that predicting the rain does not matter. What matters is building an arc that actually gains speed when the wind turns into a gale. Today I want to share with you a strategy that goes beyond just surviving a crash. I want to show you how to become anti-fragile. This is not just about being strong or being resilient. This is about positioning yourself so that when the world turns upside down, your wealth actually grows. If you are between the ages of 55 and 80, you do not have a decade to wait for the market to recover. You need a strategy that protects what you have today while allowing you to benefit from the chaos of tomorrow. By the end of this presentation, you will understand why your current financial advisor might be leading you into a trap and how you can take control of your legacy right now. The anti-fragile philosophy. To understand how to protect your family, you must first understand the difference between being fragile and being anti-fragile. Imagine you have a package made of thin glass. If you drop that package or even shake it too hard, it shatters into 1,000 pieces. That is the definition of fragile. Unfortunately, most modern retirement accounts are exactly like that glass because they depend on everything in the world remaining stable and peaceful. Now imagine a block of solid steel. If you drop it, nothing happens. It is robust and it is strong, but it does not get any better because of the stress. But there is a third category that almost no one talks about. In ancient mythology, there was a creature called the Hydra. Every time someone cut off one of its heads, 2 more would grow back in its place. The Hydra did not just survive the attack, it became twice as strong because of the damage. That is what it means to be anti-fragile. In the world of finance, being anti-fragile means that you welcome volatility because you have positioned yourself to profit from it. While the rest of the world is panicking and watching their accounts turn red, you are watching yours move in the opposite direction. The reason most people fail to achieve this is because they are stuck in the middle. They take medium risks for medium rewards, and when the system breaks, the middle is the most dangerous place to be. I want to move you away from that dangerous middle ground and into a position of absolute certainty. We are going to stop trying to be right about the future and start being prepared for any future. The 3 pillars of protection. The first pillar of an anti-fragile life is what I call tail risk hedging. Most people buy insurance for their home and their car, but they never buy insurance for their life savings. Tail risk is that tiny sliver of probability where the market drops 30 or 50% in a single month. When that happens, traditional diversification fails because every asset class starts falling together. I want you to think of tail risk hedging as buying a very cheap fire insurance policy for your portfolio. You are not trying to win on this every day. In fact, you expect to lose a little bit of money on it during the good times. But when the fire breaks out, that small policy pays out a massive amount that covers all your other losses. This is about buying options or assets that explode in value specifically when everyone else is selling in a panic. The second pillar is the barbell strategy. The traditional way of investing is to put all your money in moderate risk assets. The barbell strategy says we should do the opposite. On one side of the barbell, you put 90% of your wealth into the safest things imaginable. I am talking about cash and short-term government treasury bills where there is 0 chance of a permanent loss. This is your foundation, and it ensures that no matter what happens, you can still pay your bills and buy groceries. On the other side of the barbell, you put the remaining 10% into highly aggressive asymmetric bets. These are investments where the most you can lose is that 10%, but the potential gain is 10 or even 50 times your initial investment. By doing this, you have eliminated the risk of ruin while keeping the door open for life-changing wealth. You no longer have to worry about the stock market dropping 20%, because 90% of your money is not even in the stock market. The third pillar is the ownership of productive hard assets. Digital numbers on a screen can vanish in a banking crisis or be eaten away by hyperinflation. Real wealth is found in things that people will always need, regardless of the value of the dollar. I am talking about land that can grow food and businesses that provide essential services to the community. These are assets that you can touch and that you can pass down to your grandchildren with confidence. When you combine these three pillars, you are no longer a victim of the economy. You become the architect of your own financial fortress. Step-by-step implementation for seniors. Now you might be thinking that this sounds complicated or that it is too late to change your path. I want to assure you that the most effective moves are often the simplest ones. The first step is to stop listening to the noise of the 24-hour news cycle. Those networks are designed to keep you in a state of constant anxiety so that you keep watching. They want you to make emotional decisions based on the latest headline. The second step is to audit your current holdings for hidden fragility. Look at your mutual funds and your bonds and ask yourself what happens if interest rates stay high for a decade. If your retirement depends on the Federal Reserve lowering rates back to zero, then you are in a fragile position. You should begin shifting a portion of your wealth into cash equivalents right now to build that safe side of the barbell. The third step is to look for those asymmetric opportunities that I mentioned earlier. This does not mean gambling on the latest crypto trend or a hot tip from a neighbor. It means looking for undervalued assets that have been forgotten by the masses. It means investing in your own health and your own local community, because those are the ultimate hedges against a global collapse. I often tell my clients that the best investment you can make is in your own independence. If you can reduce your reliance on the grid and on big corporations, you are already more anti-fragile than 90% of the population. This is about creating what I call silent wealth. It is the kind of security that does not need to be bragged about, but allows you to sleep soundly while the world is on fire. The legacy shift. We are approaching a turning point in history that will define the next 50 years. The wealth that has been accumulated over the last few decades is about to undergo a massive transformation. You have worked too hard for too long to let a single bad month in the markets wipe out everything you have built. Your legacy is not just about the money you leave behind, but about the wisdom and the strength you demonstrate today. When your children and grandchildren look back at this time, they will remember how you stayed calm when everyone else was screaming. They will remember that you had a plan and that you took action to protect the family. True financial security does not come from avoiding the storm, but from owning the only ship that gains speed when the wind turns into a gale. I want you to take a moment and think about the one thing you would regret not securing if the markets closed tomorrow. Is it your home, or is it your ability to support your kids, or is it simply your peace of mind? Whatever that thing is, I want you to make it your priority this week. We are entering a new world, and the old rules no longer apply. But for those who are prepared, this is not a time of fear. It is a time of incredible opportunity. If you found this perspective valuable, I invite you to join our community of independent thinkers. Please share your thoughts in the comments section below. If you knew for certain that a major market reset was coming in the next 12 months, what is the one action you would take today? Let us start a conversation that helps us all become more resilient and more prepared. Now that you have built your shield, you need to know how to use your sword. In my next video, I will go deep into the specific assets that have historically outperformed everything else during a hyperinflationary crisis. You do not want to miss that one because the window of opportunity is closing faster than most people realize. Thank you for your time and for your trust. This content is for educational purposes only and does not constitute financial advice. Always consult with a qualified professional before making any major changes to your investment strategy. Stay safe and stay anti-fragile.